34% returns almost, lifetime about 90% return
These
for
are nets, by the
our
way.
first fund, right? Garrison Fund One,
Yep.
our family office fund. So congratulations, Willie, and to our team for doing such a great job. What we're beating S&P by double digits as usual.
Oh yeah, yeah. We closed the quarter. S&P was up a little under 21. So
Right.
yeah,
And
we're beating them by more than 50%.
who says you can't make boring sexy? I think we're accomplishing
Literally
that.
all of Wall Street.
Well, I guess we're the rebels. Yeah. But
We're the
congrats,
most
Willie. I
boring
think,
rebels in the history of finance or humanity.
yeah. I mean, congrats, Willie, and to our team again. Shout out to our investors and to the people who've continued to trust us with our insights and our investment strategy. And I think what we've been able to do is to be able to actually be what a hedge fund's supposed to be. You're supposed to manage risk, but you can still get great returns without taking such significant risks. That is what gives a bad rep to Wall Street.
Right.
And we're not doing anything. I mean, I have to correct myself. We are doing special strategies,
We're
but
reading.
right. But at the same time, I guess to us is not that special, right? We're
No.
reading, we're understanding what microeconomics are, microeconomics, both the micro and the micro. We understand what governments are doing, not only our own, but around the world. We're keeping an eye on geopolitical matters. We're also looking at the whole S&P 500. I think one
Yeah.
of the biggest problems for a lot of investors, both retail and institutional, is they look at the big names, right? The
Mhm.
Nvidias, the Googles, the Costco's, the Walmart of the world,
And they should. Those
and they
big names
should.
are awesome.
But there's also 500 and something other companies that are in the S&P 500 that make the S&P 500,
Hmm.
and where a lot of them are missed, and they're missed
Yep.
opportunities. And I think that's what balances our investment strategy is we read everything, and then we also look at companies that people may miss, and then we hedge our risk very properly. I think our Sortino was 4.6, right, or something like that, and our Sharp ratio was 1.64. So I
Yeah.
remember, yeah, I think I told this to
Sorry,
one of
4.75 for that
sorry, yeah.
Sortino. That 0.15 is going to matter.
Yeah.
Yeah,
So
Sharp
four,
ratio over 3. This is straight from the brokerage reports, and it's using the 3 month
right.
Treasury as the risk free.
And for context to our listeners, because many of our listeners are also ones that are not sophisticated investors and may not understand what that is, but do you mind explaining what a Sharp ratio and a Sortino is very briefly?
Sure, they're both risk adjusted performance metrics, right? So if you're gaining 70% on your stock, okay, great. But if you look at the time trace and it's doing this and it's back and forth and it looks like a roller coaster, yeah, you're getting great returns, but at what cost? Literally at what cost of volatility? So Sortino is a way to normalize that. You can think of it as uh, risk a return per any unit risk. That means up or down, and I'll get into why that's important here momentarily. Basically, the higher the Sharp ratio, the more that your portfolio is like a freight train, right? You're just going to have the same returns day after day, with as little volatility as possible. And if you look at our compound monthly growth rate, you know, it's been almost a line for damn near a year, right? So
Yeah.
we're
Now,
our returns
what's
are
the
very,
standard number? What's the ideal number on average?
so historically the Sortino of the the Sharp of the S&P is about zero point 0.7.
Yep.
So,
Yeah.
you're
So for our listeners in
we're beating the
context,
hell out of the S&P.
yeah. And as Willie said, the higher the number, the better. Zero point 0.7
Yeah,
is about average.
yeah,
I think for
and
a lot of
so
funds is about the same. A lot of
yes,
funds is zero point 0.7 or lower, actually. So for
yeah,
us to be at 1.62, 1.67 is pretty remarkable and consistently holding that.
yeah, and the Sortino is another risk-adjusted metric, but it only focuses on downside, right? So we're designing the we're optimizing our portfolio based on our reading and our take on what's going on in the world to minimize risk on either side. So there's upside risk and there's downside risk. Uh, the Sortino is focusing on the downside risk, which means losing money. So upside risk means, well, you're supposed to get 10%, you got 12. Oh crap. Well, you shouldn't. A sharp would penalize that because it's still a deviation from what you're targeting. A Sortino, I think, is a little more realistic because, like, okay, you got more than you expected. So what? You shouldn't be penalized for that. So a Sortino of 1 means that you're basically throwing darts at a board. Uh, the higher the Sortino, both of these ratios, the higher the better. Sortino over 2 is where you really start to get people's attention, especially if you can hold it. It means you are very biased towards uh, performance without necessarily without losing too much, right? So our Sortino, I think we closed the quarter at 4.75 straight from, and again, this is straight from IBKR. We're not, doing this in Excel or making it up.
Yeah, and we do
That,
audits with BDO
yeah,
and everyone,
of
so like
course,
there's checks and balances. Yeah,
of course. But that Sortino in the past has also gotten up to almost 8.
yeah.
Okay, so like these
And for
numbers,
context, what's a good Sortino?
a good Sortino of 2 means
Right.
you really have your head on straight and you know what you're doing. I don't know of very many hedge funds where you tell them like, oh, our Sortino is 1.4, and I don't think anybody will give a damn. Like I don't think anybody cares until you start breaking that threshold of 2.0. Needless to say, we've been above that pretty much since we started this fund.
Yeah.
So
So yeah, I mean we average about 4 over 4 on average, between
yeah,
three to
about
four
4.
plus.
Yep.
Um, but also for our listeners, yeah, I mean the hedge fund guys, Wall Street guys, you guys understand. We're kicking your ass. But for our listeners, the risk management is everything for our world, right? And it should be for everyone. When you're about to invest money that's your own or someone else's money, you have to really manage risk. And so that's something to think about if you're downloading Robinhood or you're investing some money or extra cash. You got to really understand the risk you're taking and how do you manage that risk. And that's what we tell many people who've asked us questions, especially those that are retail investors, is you better have time to be able to spend time to do your homework, because it's not just okay, this is a great stock or a great company to invest in or a great commodity or whatever. It's like, how are you going to manage that risk that you're taking, right? And I think that's one of the biggest key lessons, and that's why you like ETFs, right?
Mhm.
ETFs is that's the biggest advice we give people is to invest in general ETFs like a S&P 500 VOO, right? That's the Vanguard S&P 500 index fund, something like that. Because the reason why that's heavily de-risked is it's literally investing in the whole S&P 500 into
Yep.
one index fund. So you just park your money there and it just grows over time. So unless the US economy evaporates, right, then that doesn't exist. So it's spreading the risk across all companies. So if 250 companies do great, the other 250 do terrible, it balances out,
Yep.
right? So that's the beauty of something like that. So for example, look, we're shorting U.S. bonds, right? We'll get into that and why we're doing that, but we're shorting.
Shorting them via ETF.
Yeah, so we're shorting them, but we're doing it via ETF. Reason is because we looked at shorting it directly, but we're not in the mood to do so. We're capable of doing so, but we rather just manage it with ETFs that are existing. And we see a lot of downside management risks, so we were able to do that. But anyways, enough about our fun. We are doing great, and again, we shout out to everyone who are investors and support and everything. And we're raising our next fund now. But
Hmm.
you can see that we are a testament to the fact that you are able to make boring sexy and to be able to manage risk and still get great returns.
Yep.
And continue to beat the S&P 500. We beat them in 2022 when the markets were down double digits. Well, we beat the
Beat
last
the hell out
year,
of them last year.
beat the hell of them last year, and we're doing the same this year. And so that's what great about what we're doing. And so for all the listeners who've been listening to our episodes and to our podcasts, what we're saying, I hope is resonating because we're also delivering it. So we're not just talking the talk, but we're actually,
Yep.
putting into action. So everything that we say, right, we actually do ourselves personally, as well as we do so for our fund,
Hmm.
as well. So since the last episode, one of the things that I know that a lot of our listeners and our peers know that where our mind is at is that the Fed continues to be behind. They
Yep.
continue to make poor decisions based on data points that, in our opinion, aren't really that relevant, to making these decisions. And we've warned about rate cuts, right?
Hmm.
And unfortunately, the Fed, led by Powell, Fed Chair Powell, has decided to cut the interest rates by 50 basis points in September, which we
Yes.
were adamantly against. And we have many reasons why. You can read our white papers, you can listen to our previous podcast, but it was such a big mistake. We were furious that it happened. But what did we say? We said if you cut it by 25 or 50, regardless, what's going to happen is that interest rates will go back up, actually. No, sorry, not interest rates, excuse me. Mortgage rates will go back up, inflation will go back up,
Hmm.
and you're risking the economy again into stagflation or worse.
Yes.
Um, so, I'm actually just, my blood is boiling just talking about it right now. But yeah,
You're
so
hiding
the
it
Fed,
well.
yeah, so the Fed did decide to cut interest rate by 50 basis points if you missed it. And Wooly, what does that mean when they cut 50 basis points for our general listeners?
Well,
And and
for
and, and how does that affect them?
well, I mean, here's the thing. For one thing, the last two times that the Fed opened up their round of rate cuts with 50 basis points, it led to a recession. So let's just get that 800-pound gorilla out front and center. The Fed, look, Powell has already openly stated that he is targeting the jobs market and that inflation, that's now the four-letter word nobody says. But when you cut rates, regardless of whether or not people in charge want to believe this, you are going to have an upward pressure on prices, right? So inflation is already whipsawing back up. I think the last core CPI print, I think, came in at 3.4%
Yep.
annual, which is the third straight month that it's upticked. And the jobs market, okay, yeah, we had the September surprise, right? We had more payrolls than expected, uh, but that's not necessarily a good thing because we also had higher than expected jobless claims, right? So per Department of Labor for the week ending October 5th, the claims were in excess of 258,000. They expected 229,000. Unemployment also raised up, so we're adding more jobs to the economy, but we're losing more jobs than expected, right? So you have this kind of balancing act where both sides of the equation are fighting each other, and ultimately, what's going to happen here is the Fed have a dual mandate: either fight inflation or keep a steady jobs market. A little more to it than that, but for the broad stroke, that's what they're supposed to do. The problem is that what you need to do for one of those is going to make the other one worse. So Powell cut rates to address the softening labor market. When you do that, it is virtually impossible to not have inflation. Why would you not? You cut rates, you're enticing more money to be put into the economy, you're making it cheaper to borrow, and so on and so forth. So what we're seeing here, the Fed just seem to be going back and forth. Are we addressing inflation? Are we addressing jobs?
The Fed
Uh,
doesn't know what the hell it's doing.
I would, you would certainly go that far. But part of the problem is that the Fed only have to work on delayed data and delayed results, right? Anything they do today is going to take 12 to 18 months to see, typically, to see the result of. But the problem is that you have a lot of real-time data that are showing you things that you don't have to wait a month or a quarter for. Okay, you have auto delinquency rates, especially in subprime loans, going up. and it's damn near getting to 2008 levels. You have gold continue to perform like we're already in a recession. You have one of the Fed's own metrics called the SOM indicator, which has been a perfect predictor of the last 9 recessions, above where it would normally indicate that we're heading into a recession. Like I don't know what else the Fed need to actually kind of wake up and make a decision. You need to address one of these issues. We've already spent 3 years not addressing inflation because it was the good ship transitory, as Powell said during the Jackson Hole meeting. And what are they just giving up on this?
Well, here's the problem. Here's the problem. The
Okay,
Fed is not moving at a pace of modern times. That's the problem.
sure,
We live in a world now that is such a faster pace. And the reason is because of multiple factors, right? I mean, you have quicker access to data than ever before.
yeah,
You have a jobs market that's much more volatile because of the tech jobs, right?
yeah,
And you have a jobs market that is very service oriented as well as a lot of consulting.
yeah,
So a lot of these jobs are come and go real quick, right? It's and a lot of this isn't permanent. Um, you have a world in where you have Gen Z, you have millennials, in where a lot of them work from home, but they may have multiple other jobs,
yeah,
part-time jobs, other full-time jobs, and at the same time, there's a lot of gig jobs, right? Which is the come and go jobs, right?
yeah.
It's a gig economy still. So what I see is the Fed still trying to act like they are from even 10 years ago or 20 years ago, right?
Mm-hmm.
It's not the same now. I mean, the our world has changed significantly, especially post COVID, right? Post COVID has changed a lot of things. And I think the Fed is still their heads up their ass. They're not changing with the pace of the
I don't
times.
think they're going to subscribe to us if you keep telling them.
I don't give a damn. They're I hope they listen and all that, but they're just not moving quick enough. And we are in a major shift. I think, and I've said this recently, we're in an industrial revolution of AI. And yes, it's not like the dot com, right? People say this is like the dot com and all that. I think the overall stock market is way overinflated, and I think it's due
Uh-huh.
for a bust, but it's not, a lot of it's driven by AI and tech and all that, but there's just overall different fundamentals that are adding to it. I mean, it's trading at 52x, okay? That is way, way overvalued. But back to the point of the Fed moving too slow is they're way too old school now. Um, we can't act like we did in the 80s, 90s, and 2000s anymore. We have to act now. We have to act at a much quicker pace. The
Agreed.
world's moving quicker, and there's just an overall shift in everything. I mean, we've talked about in our other podcasts abolishing nonsense about mental health, and this reflects in everything in the world, right? We're doing everything so much quicker. We're so impulsive. But again, the access to data and information, and I think Powell and the Fed are, and there's some Fed members that are recognizing this. But Powell needs to understand that his decisions they still do take time to reflect, but the
Yeah.
decisions need to be much quicker, right? And he already did that. He already showed that in what 21 and 22 where he didn't act
Hmm.
quick enough. That was when he should have spiked interest rates at a much more rapid pace, right? I mean, you saw the huge spending and
Yeah.
differentials in supply and demand because of COVID,
Oh,
right?
yeah.
And that's really all it is, right? I mean, for people listening, economics is supply and demand, simple as that. Like that's the core base of it. It's supply and demand, and the whole purpose of the Fed is to do checks and balances from financial standpoint to manage that supply and demand so that inflation does not get out of hand. And when when supply was way more than demand, things got cheap, right? Obviously,
Mhm.
but as we got out of COVID, what happened? Demand surged because everyone's getting back to it, and it took a little time. And there's a 2-year frame well, from 22 to now, like 21 to now, right? There's like a 2, 3 year period there, and we're still creeping back up with demand. But the problem is the Fed did not put a stop to that quick enough, right?
Right.
That's when interest rates should have been. I was saying 7, 8%, right? Because we have that big tsunami coming. You better tame
Yeah.
that quick, and didn't do that fast enough. And now that demand is now creeping back up, and now that savings, like you said, right? Savings are drying up. People's mismanagement of their money because again, when you were sheltered during that time and yet all this excess money that you didn't have
Yeah.
before, you know what to do. Now that you're coming out of the gates, you're like, oh, let's go, let's go, let's travel, let's do all this kind of stuff. Now that reality's settling in, right? Reality is
Mhm.
the fact that because the Fed didn't tame inflation up, everything's costing more. You're not leaving the grocery store without spending at least $50 for just milk and eggs and a couple other things, right? So things are
Yeah.
more expensive. Auto
I know. I
insurance is
just did
going
that this
up.
morning.
Yeah, exactly. So everything costs so much more because of that demand surge and not enough supply. That's especially so in housing as well. That's a
Hmm.
big problem with the cost of housing and with mortgage rates. And I know I'm dragging on here, but hopefully this is helpful to people understand that what's going on, and hopefully the Fed's listening. And so that's why everything is so expensive. Everyone, it's not only did demand surge so quick and supply was able to keep up because of COVID, and it's taken a few years for that, and people have so much extra money to spend, but
Hmm.
now reality's settling in where okay, they're not having up as much money now because things are expensive, right? The job market is not as robust as people say it is. You're seeing more layoffs. You're seeing people. I know we'll get into that, but more people are having multiple jobs to keep up
Yeah.
with expenses. Geopolitical matters are playing a factor. The weather, hurricanes, and supply chains are being affected. So all I'm saying is that it's a melting pot of what the fuck is going on. Is what I'm saying. And again, a lot of this may have not been able to be foreseen by the Fed, right? With the hurricanes, with geopolitics, but they should have at the same time, right? The world's unpredictable.
Hmm.
You have to still factor those things in when you make these decisions. But just again, the basic fundamentals of supply and demand, that's what affects inflation. They did not manage that properly, and they're not doing that again. So they
Right.
dragged it on. I've said this numerous times. So they've dragged this on now for the past couple years. They've slowly raised interest rates, and all it did was just make it worse.
Hmm.
Because all the effects of supply and demand and these interest rate hikes that they did not do anything to alleviate that
Well, they
because it
took
wasn't
nibbles.
high
They
enough.
could have been taking bites.
Yeah. And now that they're at a point in where, okay, oh shit, the slow hikes are costing a lot of money to borrowers, right?
Hmm.
And it's creating a lot of friction with the economy, and then now you've seen consumers being hurt by it, right? Consumer spending, and then you have government spending money like drunken sailors, and that's another major problem. So
Yep.
it's a shitstorm that is brewing. That again, much of it couldn't be prevented, but now they're trying to, and to the question you were saying, like the Fed's either choosing inflation battle or jobs battle. They're choosing the jobs battle. They rather keep a robust jobs market, thinking that will keep the consumer healthy and the economy healthy. When in reality, no, it's not going to do that. An inflation battle is the worst battle to deal with, and if you look at history, every sovereign nation's biggest battle is not major wars, really. It's inflation.
Yeah.
Um,
It's
at,
what doomed Rome.
yep,
They literally shrank their currency. Uh,
yeah.
no, I mean the Fed can't seem to figure out what battle it wants to wage, so it's going to end up losing both of them. And the
And that's a problem, and that's a big problem. That's what we're seeing,
Yeah,
and that's what we're predicting. But this is something I don't think we've seen before, have we, Willie? I mean, this
I
is,
mean I don't think
this
so.
is unique beyond so many ways.
Right.
Uh,
So I mean here's I mean if you want to have terrifying stats to throw to our audience, I have some of my own. Um, Interest rates obviously affect debt service payments. So when you have a government that spend like drunken sailors to the point where even Jamie Dimon is talking about the infamously reserved like whatever the opposite of a firebrand is. The guy chooses his words very carefully when he's on interviews. He's explicitly mentioned issues about federal deficits, and our government's deficit spending and our current interest rate environment means that right now we just recently crossed a pathetic threshold of having to spend more on service for public debt than on defense procurement. It's only the second time in however long the Federal Reserve keep the data. It's only the second time in that database's history where this has happened. We're now spending more money to pay down our debt than we are spending to protect our nation. So it's not quote unquote just an inflation issue. It's not just a credit card rate issue or a mortgage rate issue. The Federal Reserve's decisions impact more than just the economy. It's impacting our ability to defend ourselves as a nation. We only have a fixed amount of budget, despite how the government may spend it. Budgets are not unlimited. Okay, modern monetary theory of just continue creating money out of thin air. Okay, that's not real. All right, we are facing very real constraints in how we spend money as a country, and nothing seems to be changing. The my big question is the ideal time to slam on the brakes to stamp this out was in 21, right? 2021, when inflation was transitory and Powell's choice was basically to do nothing. It's too late to slam on the brakes now. Okay, now we've gotten into a position where no matter what path they take, we're going to have a bad outcome. Okay, it's easier to slam on the brakes when you're doing 2 miles an hour instead of 200. But the problem is that the thing with the jobs data that people don't seem to realize or appreciate or give a damn about, yeah, we have higher than expected jobs print. Great. Most of those jobs, most of that increase was due to government jobs. You cannot just continue to hire people into the government to rescue the labor market as a whole. That's what socialist countries do.
Right. And to make a point there on top of that, so the key point you said there is there was more government job hires than the private sector. That
Government
is,
jobs have been the only ones that have steadily increased for the last several years.
and that's dangerous, and that adds more to government spending, right? Really, it should be the private sector hiring. And what we've been seeing is more and more layoffs. I mean, Boeing just
Yeah.
let off 10%. There's other
Oh yeah.
factors that involve in that, but but more and more jobs. I mean, we're seeing it every day. More companies are laying off people, but the point that I want to make there is, okay, that's just the jobs, right? How this how all this works is oftentimes when consumer spending lags,
Mm-hmm.
right, to keep up with the economy's growth, what happens is the government then steps in, right, to spend more to fill in the gap of the lagging consumer spending, right? Often that happens during little downturns, and that's manageable to a certain point, right? And the only reason why the the economy hasn't busted yet, and these traders are able to trade like drunken sailors, and the government's continuing to spend like a bunch of lunatics, is you do see consumer spending weakening. It has happened, but the reason why we haven't seen it being reflected into the economy is government spending like crazy, right? You have the spending of the CHIPS Act,
Mm-hmm.
right? You've had continuous short-term stimulus injections from the government. You've had numerous other spending and initiatives that the government has done, which some would agree with, right? The CHIPS Act I thought was good because we do need
Yeah,
to
absolutely.
attract more tax incentives and spending to build chips here in the U.S. And to enhance supply chain of critical minerals, which you and I have been very active about since 2015, because we need to control the supply chain from a national security standpoint, and for our chip manufacturers.
Mhm.
But that was one of numerous spending injections that have happened from the government. So that spending fulfilled numerous gaps from the
Yeah.
lagging consumer spending. But how long can that last? is the big question, and
We'll find out in the
I
next 2 quarters.
right, and that's something I a lot of listeners need to understand is that's gonna and including Wall Street, right? And I know some of them are being naive like a motherfucker. Excuse my French, but they're being very blinded. Like I mean, it's double shaded dark blindfolds that they have on, and there's only so much the government can do, and that's going to stop here at some point. And when that hits the fan, and consumer spending continues to weaken, you're going to
Yeah.
see a whiplash. And that's one of the biggest concerns you and I have seen,
Yep.
and it was reflected in a couple reports, right? We held ODFL, Ultimate Freight Line. It's one of our favorite holdings,
Hmm.
but they are a big trucking company, right? And they're a huge
They're the
indicator that
trucking company.
they're the
They're
trucking
badass.
company, right?
Yeah.
And one of the indicators we look at to see how the economy is doing is trucking companies, supply chain, right?
Yep.
Obviously, if more goods are moving around, that's a good thing. Consumers are spending. There's a lot of robust spending. But if you see that start to decrease, you're gonna go. We go. Okay, there's a spending. Consumers are getting weak. And what we've seen is over the past couple quarters, and it really started about the end of last year,
Hmm.
is a big decrease in the amount of volume that these trucking companies are moving.
Yeah.
And it's really expedited the past couple quarters. And full disclosure, we have sold our stake in ODFL, although we love them. But the biggest reason why is we saw the writing on the wall, right? Their forecast for next year is slashed, and they have put warnings up in their earnings reports, and you're seeing a big drop
Yeah.
in the supply into the amount of shipments and the volume that's going on. So that is a clear indicator that consumers' financial health is continuing to weaken. So you have that on top of all-time highs in auto delinquencies, right? You're seeing defaults in general going high. Credit card debt continues to be outlandish. And you're seeing people starting to ration their spending a lot more. In
Well,
addition,
it's
on
not
top
even
of
just
that, we
that,
just talked about
man.
the jobs market, right? You just talked about that, the jobs
No.
report.
Yep.
More people than ever in history have two full-time jobs, right? More people have multiple part-time gigs like ever before. That's the U6, by the way. U3 jobs report to us doesn't really matter. The U6 does.
U3 is next to worthless
Yeah.
as a figure.
And participation rate is all-time low. And what that means is people have either given up on looking for jobs because they can't find one, or two, they're just living off of government benefits, right? And
Yep.
that's a scary thing. So, bottom line, consumers are hurting, and it's being masked by outlandish government spending to fulfill the gaps. B, the stock market being completely delusional, trading at 52x. I don't know, these guys are like at all time highs. But when I say high, I mean their high is a fucking kite. The way they're trading, and you can't keep using AI as an excuse for this big boom of spending, and it's gonna and all the red flags are there, and we see 2025 being, and we've said this the past 2 years, right? If you go back to our reports that we've written, we saw 2025 being a bad year. And unfortunately, many times, it's good to be right, but it's also nice to not be right on certain
Yeah,
things too. Like
absolutely.
I'm okay with being wrong in some aspects, but unfortunately, we are continuing to be right with where things are going. And 2025, we believe, is going to be a breaking point for the economy, not only with the United States but globally. You see it with China, right? They
Yeah.
they they put in 280 billion in stimulus injection. They just now approved another 350 billion, so that's almost a half a trillion. That's just over half a trillion there. A lot of artificial spending, and that can only go so far. So they're hurting as well. So two of the leading economies are really kind of having some reckoning moments here.
Yeah. Well, I mean, there's two big things there. I think we should address. Number one, the consumer spending. Undoubtedly, people are going to say, "Well, the consumer is resilient." Well, no, because the consumer is turning increasingly toward what the one thing, the one four-letter word Vin loves more than anything in the world, BNPL. Uh,
Fuck. Don't. All right. I'll let you.
but
I'll let you finish before I get into BNPO.
but also the issue is, and we wrote about this on one of our posts on the platform formerly known as Twitter. It's not just that BNPL debt is opaque, meaning it's not reported to credit agencies, and therefore it's phantom debt that cannot be appropriately, examined, and you can't make policy decisions on for rates based on data you don't have. It's the fact that people are now using credit cards to pay down BNPL installments. That that should be terrifying. Okay, because again, you're trading phantom debt for real debt at what is undoubtedly a significantly higher interest rate. So the consumer is not as healthy as people might think. And as far as China, yes, the people expected, investors expected a lot more stimulus when September ended. There was some week-long holiday that I'm not a cultural expert in, so I'm just going to parrot what I read on Bloomberg. There was a week-long holiday in September. They didn't get that stimulus, and that exodus is part of the reason why the Hong Kong index drops over 9% overnight. But it also highlights two things. Number one, it's the danger of deflation, because everyone talks about inflation, but people forget deflation can also be just as bad or worse. Sorry, crypto bros, deflationary currencies are not a good thing.
Mm-hmm.
And secondly, there's also just very little reason to trust the data coming out of China when everything they have no reason, they have no motivation to be honest, especially if it makes them look weak. And so when you say the two biggest economies in the world are hurting, I absolutely agree. And the two biggest economies in the world have also just demonstrated very painfully, and what may be a lasting pain, we're demonstrating that stimulus is not a long-term solution. Okay, it's a short-term band-aid. Oh my God, we got hit with this pandemic. Stimulus. Okay, fine. But don't forget to mop up the mess that you just made with that stimulus once the event that triggered it is over. I really do think that policymakers are starting to think that we can just deficit spend our way into eternity, and that's just not how any economic system works.
Yeah, I mean they just keep kicking the can down the road, right? I mean that's the
Yeah,
problem right now is we're in a the problem is it's been a divided government right now, right? So,
yeah,
all these negotiations, you come up with the short-term stimulus. It's just kicking the can down the road, and it's not addressing the problem, right? And regardless of who wins in November, it's not going to
oh yeah.
matter. I mean that's the problem. It's in November because both candidates and both parties one of the most disappointing things, right,
Mhm.
is none of them have truly addressed the government debt, right?
Yeah.
So we've talking about consumer health not being good, right? And it's not. The consumer health is not good at all. The government financial health is not good either. And so when you have both, that's a major concern. So now let's talk about politics, right? Which I know real well. So the problem about either party, right, is what they want to do is they want to help the economy, and I get it, right?
Yeah.
One party wants to, one party and candidate wants to put tariffs on. They want to bring in more revenue to the government that way. They want to cut taxes to help free up more capital for the consumer to spend. They want to deregulate so that more businesses can invest into the economy. Okay, fine. What is the cost of that, right?
Yeah.
The other side is okay. No tax. They want to hike taxes, right? Which is squeezing the consumers. I mean, they said no under 400,000, but the trickle effect always plays a
Yeah.
role.
History says otherwise.
Yeah, so okay, so you're squeezing more taxes out of people. You want to put more stimulus into the economy for small business owners and for people. And you
House
want to,
subsidies for first
house
time home buyers.
subsidies, home buyers. So where is either side? Both either side. I don't care. Like both sides, fiscally, I think are terrible. But where are they gonna pay for this? Right?
Yeah.
That is the biggest problem. So, and the reason why I bring this up is whoever wins, right? White House, the Congressional House, the Senate, you know, the problem is party, right? It's going to be whoever wins does not want to be the one that cuts that puts hard line on spending, and they want to be the ones that tank the economy. That's the problem
Right.
right now. Is you don't have leadership that is really have a backbone to say, look, we're gonna have to suffer for 2 years, but trust me in this path forward. We'll make this less painful as possible, but our economy will prosper
Hmm.
if we put a halt into spending, cut spending in all this garbage areas, because a lot. I mean, the budget needs to be cut by 40% because there's a lot of it's bullshit. And then,
Because we're 40% in the hole.
yeah, I mean, it's a lot there. So no party, no president wants to be the face of when this economy tanks.
Sure.
So all they're going to try to do is just increase the debt ceiling,
Yep.
right? And continue to fill in the gap of the lacking consumer resilience because there's no resilience. I mean,
Right.
um, and so that's a major concern. And with the way geopolitics is going, we're going to need to spend more in defense, right?
Hmm.
And that's going to cause a lot of issues in that alone. And then you're seeing because the consumers is being so squeezed, in which we'll get into here about the devaluation of the dollar. So your dollar now, as a consumer, is not worth as much, right? Just because you make six figures in the 100,000 range, right? That's not what it used to be. So when you look at the recent port strike settlement, right? Even though
Oh
I
yeah.
think that president is a fucking hypocrite, he can go to hell. Oh, I make $1 million a year and all this kind of stuff, and I will tank this economy. It's like, okay, I get it. You want to help your union and your workers to get paid more,
Yeah.
which I saw what the average was, 143,000 a year plus 35,000 benefits, healthcare benefits. I think that's pretty damn good. But I get it though. I mean, their increase in pay needs to catch up with the pace of inflation, right? I get that.
Absolutely.
I just thought the approach could have been better, but all this could have been prevented. These strikes that has been happening with the unions and all that. How? Strengthen the dollar, right? And that the consumers now, all workers now, I don't blame in what they're doing, right? It's because the government hasn't helped them, strengthen their purchasing power.
Right.
And purchasing power is not just with governments and all that, because when people hear purchasing power, they think of governments, they think of companies. It's also the individual, right?
Yes.
You should be able to walk in and buy 2 dozen eggs and not pay $20 for it. That's dramatic, but you know what I mean.
It's
And
only
actually,
18 now. Come on.
yeah. So that's the key thing, and I think policymakers don't understand that. And we hear you. I'm sure our listeners would agree. And so you kind of can't really blame the strikes, but that's heading into a dangerous direction, though.
Yeah.
So because the consumers are hurt, and yes, we get not everyone gets what the problem is, but you can't blame them. They have time to think about this. They what they need to do is be able to pay the bills, put food on the table, and have a roof over their head. So the fact that the value of the dollar continues to decrease, the purchasing power is weakening. Their salaries are becoming more squeezed. You're going to see
Hmm.
more of these strikes, and it's going to cause companies and organizations to pit against workers, and that's a dangerous situation to have
Yeah.
because there's only so much these companies can bend. There's only so much these workers can bend, and government isn't doing jack shit about it, but making it worse. And so that's another factor to play into here moving forward into this economy. And when you have a weakening economy and consumers that have less purchasing power, what happens? Upheaval. And that's one of the biggest concerns I have for this country going forward, or we have, is just the instability of our society. So that's something to keep an eye on. And this is why I just get so frustrated with our leaders. It's like I'd rather put party aside in politics and saying, "Go look, we need to protect our democracy," and that comes from inside out,
Yeah.
right? We're so worried about these outside factors, and we should, but we should really focus on strengthening ourselves and uplifting our people. And the way to do that is economically, right? Economics at the center of every nation's stability, and we're not doing that. So, but to sum up, you and I see a train wreck coming.
Yeah.
That's definitely happening, and
I think
I
it pulls
just
out of the station on November 5th. Is that
right, yeah. I mean,
when election night is?
right. I just don't know how much more the government can spend, right? And I just don't know how much more the consumer can take. And the Fed's decisions continue to give us no confidence in them. And this goes to the point of why we're shorting U.S. bonds. You and I had a
I
lively
never
debate
thought we'd
about.
get here. I never thought I'd see the day.
I never thought so either. As a diehard American, I still am, right?
Yeah.
This country means dear to me and my family. I know it means dear to you. I never
Yeah.
thought I would ever short the U.S. bonds, right? Which for our listeners, shorting the U.S. bonds mean you're shorting the U.S. dollar pretty much. You're
Yeah.
shorting the
You're
fact
betting
that
against the most powerful country in the history of humanity.
exactly. You're betting the fact that the value of our currency is decreasing. And yes, we make money off of it, but that's part of our job, is our
We have to.
responsibility and our duty to our investors is to give them returns. But that's the reason why we're shorting U.S. bonds, is because we see this, cumulative mess, and all this is going to do is it's going to devalue the dollar further. In 2025, we see our shorts will increase probably 10 to 20% range in
Yeah.
return investment, because until we halt the way we're spending, and we have hardline fiscal policies that we need to sacrifice and live through for the next 2 years, it's not gonna, the nothing that we see is gonna get better. And it's really sad. I mean, it hurts me to do it, but it's just a no-brainer. So, and
Well, it's
what this means
embarrassing,
is, it's
right? For
embarrassing, and what this means to our listeners, real quick. You see what it means to us, right? I mean, we're all feeling the pinch, but sadly, we can make money off of it. But for everyone listening, what's going to happen is the job market's going to be tighter. So your ability to be able to move around and navigate the jobs market is going to be much more difficult. So please think of that when you're at the job that's paying you. Yes, no job's perfect and all that, but sometimes you just gotta bite the bullet and just kind of deal with it.
yeah.
But just be happy you get some income coming in. But your spending power is continuing to weaken. It's going to be the
Uh-huh.
problem. At least for the foreseeable future, in the next 18 months, we see that your dollars can be worth less. So things will continue to get more expensive, and that's really it. I mean, I'm trying to provide more context, but that's just the bottom line. It's just your purchasing power is going to weaken for at least the next 18 months, until policymakers make a change. And the biggest advice we give to people is be careful. Like, you gotta hold your lawmakers accountable.
Yeah.
The local office is within reach of you, right? Even if you don't like that candidate that won, you need to be able to voice your opinion, saying, "Hey, I'm being affected by your dumbass decisions with spending, and I'm going to hold you accountable to it." If and the biggest thing people have to remember, whenever someone in Congress, right, the House of Representatives is the most powerful one, right?
Mhm.
And then the Senate too as well, but if a U.S. House of Representative gets at least a dozen or more calls about the same issue, they're gonna pay attention. So something for everyone to hear, listen, and take to heart here is you're hurting right now economically, financially. Call your local office and tell them, right? Because they will hear you, because that's all it takes. 10 to 12 plus constituents call them, they're going to be like, oh shit, okay, I got to pay attention to this because what do they want to do? They want to be reelected,
Yeah.
right? So if you get more of that coming in, that's going to happen. And then in the Senate, if they get probably about 25 or more calls, ideally, a couple hundred, because again, the Senate covers more of the whole state instead of just a little zip code area, a constituent area. They're going to pay attention. And so that's probably the biggest advice I could say is that, because that's the only way we could control it right now. Is if and what Warren Buffett said, he can balance the budget, saying if they if they don't
If spending exceeds by 25% or something, they're ineligible for reelection.
exactly, and this is the closest way we can
That
do
would
that.
fix it. I don't think that's going
They'll
to
fix
happen.
it. Yeah, but this is probably the best way of doing it is you and your friends and your neighborhood and your area, if you can really hold your representative accountable, you'll start getting a change here. And I'm hoping our podcast spreads that message and really get people to get more active. And again, it doesn't matter if your representative's a Republican, a Democrat, independent, you like it or not, right? If you didn't support them, they won. Or if you did support them, they won. It doesn't mean you just take a back seat. You are in the front seat. They work for you, and if you want this purchasing power and the economy to stabilize for you, the people, you got to hold them accountable. And the next CR is coming up, right? The next budget negotiation is coming up here right after November.
Yeah.
So they only extended the spending until December. So everyone, December, January. So everyone, you need to make a call saying, "Hey, I need you to balance the budget here, and fix this situation."
Yeah. No, you're absolutely right. And I think a big part of it is, I think a lot of us have just been kind of conditioned to either hate politics outright or just, well, I don't want to talk about it. Like how many times, how many times in your past you go on a date and like, oh, I don't want to talk about politics. I don't watch the news. Well, I mean, here's the problem. It leaves you susceptible to really terrible decisions that you think are going to solve things. Okay, now you mentioned a bit ago certain individuals want to increase taxation, but don't worry, it's just on the rich. Okay, well, here's a couple historical tidbits for you. In the 1940s, income tax for top earners was over 90%. Didn't solve anything with the economy. When the notion of an income tax was first codified into law, it only affected the top 3% of earners. I guarantee you will never go out and see anybody, no matter what they make, that has not paid income tax. Even things like long distance tax. I mean, you sent me an article about it. There was an excise tax on long distance phone calls that was introduced. I think it was pre World War One.
Yeah, everything is
It
taxed,
was
dude.
only overturned
Everything.
in like 2006, right?
Yep.
Because like everything gets framed as, well, we're just going after the rich to help you. But over time, those bills don't go away. Those taxes don't go away. Those taxes just keep getting lower and lower and lower and start squeezing more and more people. And yes, there should be economic stability. There should be a measured push toward financial prosperity for all Americans. But the theatricality of how it's done, like this longshoreman thing, pissed me off because literally the next day there were videos on online of ports in China where everything's on 5G and you have longshoremen controlling multiple vehicles, multiple pieces of equipment, and it's not automated, but it's damn near close to as automated as you can have, right? That's what people don't understand. When you try to strong arm an economy, you are going to force the hand of businesses to find the cost cutting solution. If you're unloading ships, you want to make 200 grand a year. Good for you. I want to make 200 grand a year too. But the problem is that cost needs to go somewhere. Either the consumer is going to eat it, in which case they're not going to buy your product, or they're going to be able to afford less of everything, or labor gets replaced by technology, which is why when people laugh and say, well, AI is just like .com all over again. Well, no, not really, because if I'm a business and I have a massive delta in labor cost imposed upon me, I can't fix that with a website. I can
Yeah.
fix that with AI and automation. That's the big difference. AI is actually producing something of use and of value. But the let me ask you honestly. Maybe there's a little philosophical. You said we need leaders that have a dedicated long term vision. I
Hmm.
agree, but I also see perverse incentives where people want to keep kicking the can down the road because, as you said, nobody wants to be the party in charge when everything
Hmm.
goes to hell. So, aside from massive election of people who don't want to be reelected, it's like, I'm running for office because I want to fix this mess and it's going to suck. And I don't care if you hate me, but this is what needs to be done. And that's why you need to send me to DC and then vote me out if you want to. I don't give a damn. Aside from that, what would you sell? What would you tell our lawmakers? How would you encourage them to actually swallow this bitter pill and do what needs to be done if they actually value their political careers as much as they say they value the well-being, especially the financial well-being of their constituents?
Yeah, that's just political maneuvering, right? And that's where the president needs to set the tone, right? I mean, the president leadership at the top plays the most critical role, right? And the president attracts the most attention, right?
Mm-hmm.
Every word he says, right, gets amplified more than anyone else on this planet. So the key leader in all of this is the president of the United States, right? If they have a hard nosed fiscal policy agenda and they relay that heavily and they hold people accountable, that really gets people amplified, right? I mean, we've seen in history how one person, particularly the president of the United States, can completely influence a nation in many aspects and can shift, lawmakers, right? And I think, Bill Clinton, President Clinton was great at it. President Reagan was fantastic at it, right? Those are two that come up in my mind because President Reagan brought us back from stagflation and all that, and then Clinton rode with Reagan's, along with Reagan and then Bush Senior's policies, right, and balanced the budget. I mean, that was the last time it was balanced was under President Clinton. So those three presidents in a row did a fantastic job, right? So they were able to do that. But again, they set the tone, and then they led their policy team to negotiate with the Speaker of the House and with the Senate Majority Leader, along with minority leaders on both sides. And they used their words wisely in public and ran a public campaign, right, pushing the message so that constituents hear this and then constituents can hold their lawmakers accountable, right? So a lot of this is really complex, but long story short, communication is very vital, and then having the right movers and shakers on your policy team behind the scenes to spread out to DC and make sure that this happens. Unfortunately, I don't know if we have the right candidates right now to do that. Again, just my personal opinion. I don't
But
know.
they're the ones we got.
They're the ones we got, but I don't know if they're the ones that can set the tone. Like, okay, I get it. They want to drive economic prosperity through tax cuts, through supplemental injections, right? And then forgiveness and all this kind of stuff. But that doesn't do anything. That's just minor band-aid boost.
Yeah,
But again, purchasing power is the most important thing. The value of the dollar, right? And balancing the budget. Because you remember the '90s. I mean, if, the '80s and '90s and 2000s prior to '08 was prosperous. Now, for the consumer,
yeah,
don't get me wrong, '08 was a disaster, but that was because of Wall Street. It wasn't because of the consumer. But in general, things were cheaper. We were able to buy things easier. I mean, there was abundance of supply and demand. It was balanced, right? You have people wanting things, and we had enough supply for it. But again, so to answer your question, it's multiple leaders setting the agenda, but the president has to. Like if I was president of the United States, I would say, hey, look, America, we are at a tipping point right now, and you've elected me for 4 years. During these 4 years, I need you to trust me on this policy agenda, in particular the economy. right? And I'll simply explain how this works, and that I'm here with you, right? I'm sacrificing with you, and I need you to support me and hold your lawmakers accountable in balancing the budget, and addressing this fiscal disaster that we're heading into, and
Mm.
lay out the things, right? We're gonna cut spending. We're gonna cut spending in these key areas. I'm asking Congress to pass a bill to bring to my desk that cuts spending in X, Y, and Z areas. And the reason why we can cut these areas is because it's already bloated, right? And these are the key areas that we can start with. I'm also asking for a major audit of all federal agencies and their spending, and utilizing artificial intelligence to expedite the process, right? Hey, AI's here. Why not use
Yeah.
it? Right?
Yeah.
I will push that policy as well. I will work with the majority and minority leaders of both the House and the Senate, as well, to to negotiate with them things that they feel their constituents need, but everything has to be contingent on spending. So everything you put on my desk in the next 4 years needs to have something in it that addresses spending, right? I don't care if it's an education bill. I don't care if it's a defense bill. I don't care if it's helping X, Y, and Z. I don't care if it's like something about supply chain, or whatever it is, right? I
Mm.
need you to throw in there something that addresses fiscal. I won't sign it, right? So if you set that type of tone, right? And the public hears it. And then I make sure my communications team, my campaign team, all that, right? And my party, even though if I was running for president, I'd be independent, but make sure that this is massively spread out to the whole nation. Um, I'm being very simplified because I have
Sure.
experience in DC, so I don't want to say too much. Uh, but in general, that's how I would do it. Is a very simple address to the nation, and my campaign slogan, all that would be, or my campaign message would be just that. It's a, hey, I am here for you. I'm not here for this congressman. I'm not here for this Senate Majority Leader. I'm here for you, the people, because I feel it too. I feel the pinch as well. I
Yeah.
feel it. My family feels it. My friends feel it, right? And I want to stop this now because we are going to face upheaval. Our adversary is going to take advantage of our financial weakness,
Yeah.
and exploit us. So listen, support me, help me, hold the Congress responsible, and every bill that gets to my desk needs to have a fiscal spending attached to it that cuts it. And then,
Mm.
at the same time, I'm ordering an executive order that reviews spending at the U.S. government, all agencies, all areas. They can utilize AI. This to be done now. Um, and then I required my first major bill that cuts spending by 25% or something like that. It doesn't have to be that
Yeah.
exact thing. And I need Congress to find where the hell that 25% is. And I'll say, I know there is overspending. I know there is significant overspending here. And you
Yeah.
can't tell me you can't find 25%. And then I'll relay the
Take
message.
over
I'll talk with
salaries.
economists, right? I'll bring together economists of all sides to come in and say, look, if we cut 25%, how will this reflect fiscally to the nation? And I can tell you right now, if you cut spending by 25%, it will drive more money, cash into our economy,
Mm.
right? It will address supply and demand. It will strengthen our dollar, and the trickle effects would be monumental.
Well,
Hell,
absolutely strengthen the dollar. That's for damn sure.
yeah, hell, you and I may do a paper about it, and maybe pass it around to Congress and say, hey, look, if you cut it here are areas we found that you can cut spending, right? This is how it affects the economy. And then on top of that, like, look, as a president, I can't influence the Fed, but I'll say, hey, look, you see what I'm pushing to get done. I need you to reflect, right, based on your economic expertise, your decisions on what we're gonna do, right? And I'll hint there. If you spike interest rates because we need to control supply and demand, I will make sure I have legislation that will help those who are really under the threshold, to make sure that they get support during this tough time. Because the bottom third of Americans who are really hurting, right? I don't want them to be diminished because of the spike in interest rates. I do want to
Right.
provide support for them, and we're able to. We cut spending by 25%. We're able to take some of that to help to cover that. So again, it's just more. Our leaders need to have more complex, more pragmatic thinking, and just piece it all together. Right? It's like, I'm not an engineer. You are, but I do. But you've told me before I have some kind of engineering thought
You,
process. It's like,
you do
look,
approach a lot of
here's
problems
our
in the correct way.
yeah, it's like here's the problem.
Yeah.
Okay, how can we make this right? It's like a big whiteboard. How can we cover the grid, like all of these areas that if we do this, what happens over here? So how can we fix that? That's really all it is, and I feel like no one in DC is really thinking that way. It's all party line politics. It's all simple band-aid shit, and no one has comprehensive thinking, right? Meanwhile, we have Marjorie Ann Taylor who thinks fucking weathermen control the
Oh,
weather.
Marjorie Taylor Greene, yeah.
And I'm like, really? This is who we're electing? Right? And I
Yeah, that's
guarantee you she
a
has no fucking knowledge and understanding about fiscal policy or anything like that. Again, she's one of many, right? Again, this is not like both sides are terrible. AOC is the same way, right? She never said the Weatherman thing, but her fiscal knowledge is so limited as well. So it's like there's so many both sides, left, right, up and down. I don't care. Like everyone is just out of their minds, and we need to have leaders with this complex level of thinking to push this out there. But again, it starts with the president, though. It has to. Uh,
right.
the Fed can only do so much because, and that's where I do have some sympathy, as you know, in the past with Powell. Powell is in a difficult situation,
Yes.
right? Because he has a lot of influence. Like it's politics, right? There's a lot at stake here. So the Fed is pinned right now, and whatever decision they make, even if they do X and government still spends like a drunken sailor, it doesn't matter.
Right.
That's the problem. I mean,
Well,
look,
we've said several
something came
times
to
that
my inbox, right?
with that.
It says the U.S. money supply hit $21 trillion in August,
All
the
right.
highest level since January 2023, right? This also marks the fifth consecutive monthly supply increase for the U.S. money supply. Over the past
Jeez.
10 months, the amount of U.S. dollars in circulation has jumped by a massive 484 billion. In effect, the money supply is now at just 548 billion, below a new all-time high. So after a brief decline, the quantity of money in the financial system is surging again. And what happens? When you have too much money in the system, what happens?
It
Inflation.
loses, well, supply and demand, right? Like you
Yeah,
said before.
again.
Yeah,
Yeah,
too much supply has little value.
yeah.
It's another word for that. No, honestly, I think that you bring up two great points. Everyone talks about Volcker's hard decisions in the Reagan years, but I'm pretty sure. Okay, yeah, Volcker hiked interest rates, but what he did was pull M2 out of the economy, which is how you solve inflation. But B, pretty sure Reagan had his back. All right, let's just be honest. If he had to go lone wolf, we would be living in a very, very different, crappier
Yeah.
country today. There's absolutely something we said for, yeah, the Fed must remain politically independent, but the people making the decisions need to know that their backs are protected. It's not just them
Mm-hmm.
against the world. And that little stat that you just read is
It's
terrifying.
concerning. Yeah.
It should be
Too
concerning.
too
Yeah.
much cash in the system is going to create. And again, and then gold, right? Gold is now up 29% this year.
Jeez.
Um, And what you remember, I called it last year. Like I
Almost as
started,
good as we are.
yeah, I started to buy gold. I said there's a
Yep.
reason, and now it's up 29%. So I mean, there's just so many of these factors come into play, and so there's so much cash in the system, more cash than demand. You have gold surging. You have government spending continue to hit all-time highs. They're paying more interest, like you said, than actual
Mhm.
defense spending.
Yeah.
Um, Meanwhile, you have the consumer that is tightening up, right? And again, the only reason why they're resilient is because they're tapping into credit, right? They're tapping into every savings that they have left. And the ones who already did so are now going to default and delinquencies. So, and
Yeah.
that's only going to increase here in 25. Um, so no, so it just none of it makes sense. We're very concerned. Again, we're not trying to be doomsday people. We're just realistic people, right? We're just what you see is what you get, and we're not sugarcoating it. But to those who are listening that have fear struck into them, is simply look, you can only focus on you, right? Um, we say this all the time: spend less than what you bring in as much as you can,
Yeah.
right? If you do have to use credit or loans, manage it properly, and where you spread it, where you can pay it off and you still spend less than what you bring in, even with the loan or the credit card. Pay it
Mhm.
off in time. And try to keep the jobs that you have, unless you have a surety that you can get a new job that maybe pays better. But you can only control so much, right? But do the best you can to control your own spending to be able to ride this storm out. Because again, you look at history, we've been through these things, and I'm confident in America, and I'm confident that we have leaders that will step up, and that we'll get out of this. I mean, this is again unique situation that we're in, and that we're going to learn this down the road when we look back in history, right, to see how we get out of this. But we do go through these cycles every decade, right? We go through these type of cycles all the time: supply and demand, how do you manage inflation, and all that kind of stuff. But don't lose faith. But again, you can make an impact, at least make your voice heard. It could be a simple phone call, a quick visit on the way to work, on the way somewhere to the congressional office, or an email, right? And they do listen to that. I can verify, as someone who's worked in politics, they do
Yeah.
they do take that seriously. And yeah, I mean that's pretty much the advice that we have. That's the best advice that we can do. And I know we'll do the best in our power,
Yeah.
to relay the message. I know this podcast, is getting tens of thousands of views, and we thank you for the support. So, and we get good comments that our advice is helping them. I got a couple DMs from people saying they've, they balance their own books, and they're using the tools we've said, to be able to
Oh,
balance
good.
their money, and they're saving more money, and they're putting money into lower risk ETFs and savings accounts, and they're collecting a little bit more than what they used to. So it's good to hear that, but I really hope that you also take to heart what we just said about calling your lawmakers and sorts, and still continue to control what you can with your own budget. And again, we'll do our best as well to continue to advocate, let our voice heard in DC, spread the message via this podcast to other people. And I do know there are some people that are congressional staffers that listen, because a lot of them know me. And so yeah, I mean, what else do we need to cover? Well, I mean, this has hopefully been very enlightening to people that are listening, and hopefully, sorry about a little burst. I wasn't trying to run for president there, but I'm just saying that's what I would do as
Historians will
president.
look back on this episode as the one that turned the country around.
Yeah, yeah, President Vong, right? Yeah, I mean, I would
Hey, weirder
definitely,
things have happened, man. So
yeah.
we've lived through a lot of them.
Yeah, I definitely be running. Exactly what I just said in this episode is exactly what I would press forward with. And I don't care all the things that are thrown at me, whatever, go ahead. But I will balance this damn budget, or at least kickstart the beginning of balancing the budget, because the trickle effects are tremendous if you're able to do that. That's how you get out of inflationary battles. That's how you get out of all these different factors economically. And again, don't forget, you have our adversaries that created BRICS, right? BRICS
Oh
is
yeah,
a coalition of countries that include Russia, China,
Brazil, Russia,
uh,
India, China. I
India, some
think
parts
South
of the Middle
Africa as
East,
well.
right? And what they're trying to do is trying to, not be as reliant on the West, in particular the U.S. dollar. Yeah, and that's scary. So
Yeah, and that's the thing that I alluded to earlier, talking about interest rate payments versus defense spending. Like it, people think, oh, economics is it's boring. Like, no, economics is not boring. Finance is not
yeah,
boring. This is global conflict in a different arena, right? Like I would go even farther than you mentioned and say our lawmakers have a patriotic duty to
Hmm.
fix this mess.
I mean, they are
Or there's going to
civil
be this mess
servants.
that undermines us.
Yeah, and sometimes they forget they are civil servants. They work for us, and they got
Sure.
and we the people have to remind them.
Yeah.
Oftentimes,
Every 2 to 6 years.
every 2 to 6 years, absolutely. And this November is a big one.
This is
Uh,
this is going to be huge.
it's going to be a big one, and I think whoever the House and Senate are key too. I mean, that's what people
Hmm.
remember. The House and the Senate is vital too, and we're just keeping an eye, everyone. I mean, we don't swing one way or the other. We're just keeping an eye, and we're preparing our portfolios, and we're ready to act quickly depending on what happens. But I do hope this is a peaceful election as much as possible. Fiscally, we on the fiscal side, we're definitely um, buckling up to see what the hell happens.
I agree.
Anything else, Willie, that we need to cover for
I
this
think we scare the
episode?
hell out of our listeners enough for one episode.
No, yeah. I mean,
I'm kidding.
yeah,
They're
I mean, I
fine.
hope they're not too scared. Hopefully, we provide some kind of solutions that alleviates that fear for them.
No, I think
Uh,
it's important that just in the noise, which is constant and pervasive. I mean, I think every now and then it's important to our listeners and to everybody, just kind of take a step back, listen to the show, and
mhm.
you kind of realize the big picture. The fundamentals don't change, right? If the fundamentals were that fluid, we wouldn't be up, as much as we are. We wouldn't be having the success that we have with our family office fund. But the basics applying to the grand arena also need to be remembered, right? Like that, you say hold your lawmakers accountable. I say remember when critical thinking was taught in schools. Uh,
Oh, what
don't.
is that? What's
I think
critical
it may have
thinking?
been before your time. Uh, I think my generation was the last one that had critical thinking as a standalone class.
Oh man,
But no, it's if what you're hearing sounds like nonsense, it probably is. And don't be afraid to call that out. They are required by law to listen to you, and if they would like to be reelected, they are required by common sense to listen to you as well. So I think it's easy to get overwhelmed amidst all the bad news that gets thrown at people on a daily basis while they're struggling to survive. But it's important to remember that there is a way forward. This is not the end, and I think the fact that you personally can affect change, even if you don't see it, I think that's a very encouraging mindset to have, and it's something that people should always remember.
yeah, no, 100%. So, listeners, any questions you have after this podcast, please continue to DM us. Any feedback, comments, questions, we're happy to address them, whether directly or on the next podcast. I completely forgot to collect some DM questions, but we'll address in the next podcast. And I think the next podcast we'll find out who the winner is. So,
Yeah,
and I'm sure we'll have an extended episode to provide an analysis on that, on the fiscal ramifications on that. So thank you everyone for listening. We appreciate the continued support. Follow us, share our podcast, spread the word. But we'll get through this together, everyone.
yes, we will.